If you go into a bank right now, you're getting like 0.25%, and they're charging 3%. Think about that. If you could buy a piece of real estate right now for $250 a month and charge rent of $3,000, that's what the bank's renting your money for right now. Isn't that insane? You know, my son asked me the other day, how do banks make money? And I'm telling him, and I can just see he's just thinking, what in the hell, Dad? That you know, this is the system we're relying upon. And I was telling him, this is why we're building a family bank. We don't want to rely on the banks. We want to start financing things ourselves at preferred interest rates for our family members and have underwriting so there's still lessons and not just anybody gets money for any reason and can default. Money can be complicated. Let a nerd help you. We're here to demystify the complex nature of money by getting you answers from financial nerds and whiz kids. Welcome to Ask the Money Nerds, a weekly segment of the Wealth Labs podcast where we answer your most pressing money questions. All right, I'm considering paying off my mortgage. Yeah, it's true. I've saved the money, but is that really the best decision? I want to talk about the pros and cons. What are the risks, the benefits, the potential downsides or even upsides? I'm really wanting to decide what to do, and I brought multiple-time author, Wall Street Journal best-selling author, 19 business selling person, wonderful human that is an inner circle trusted advisor and has won the money game already. So I figure it would be a great conversation for us to have back and forth, and Stolba can just poke at us and make sure that we're making sense and, you know, ask questions to clarify. Hey, Rich, what's up, man?
Garrett, good to see you, brother.
Zigzag principle, bootstrap business, toes turn purple.
Legacy, most important.
Yep. And so, you know.
Done with the ego stuff, the important stuff.
Yeah, you gave me a book called The Second Mountain, and now you said you've been on the Third Mountain.
Yeah.
So
the elusive Third Mountain.
Yeah, that's not even written about by that guy.
Only for a mountain climber.
Yeah. So, yeah, I mean, I'm really considering this. I'm really thinking, okay, like, here's my concern.
Yeah.
Paying off the mortgage, first and foremost, ties up a lot of capital.
It does.
And some people will say, but you could get a line of credit against it. The problem with that is, in credit crisis, they'll cut that line pretty quickly like they did in 2008, 2009, 2010. And I think we're heading for that pinch. The real estate market's been really running up. So that's one consideration. Second is I can get a 3% mortgage right now if I refinance. 3%. So Stolba, tell us about the cost of money.
So when you talk about cost of money, you talk about the best and the highest term or long-term return that you can safely get.
Right.
And I like to talk about it from the sense of like a credit card and the interest. And when you pay $1 on a credit card with 22% interest, you're actually paying $1.22.
Right.
So if you want to translate that to your home situation, go ahead and do that.
It's only costing me 3%, Rich.
Well, I guess.
But here's my big concern, all right? They're putting so much money into this economy right now with no value. Just putting it on computer screens.
They are.
And what that means is every year my mortgage is going to feel cheaper and cheaper because inflation is a friend when you borrow money. It's a foe when you hold money. And so my wife doesn't care whether we pay it off or not because she says this isn't our final home that we're going to stay in. You know, we're going to eventually move when our kids hopefully move out of the house. It depends on how good I'm doing as a father on how soon that happens, Rich. You know, they're 13 and 15 right now, but we plan on staying there for a little while. The payment is extraordinarily manageable. I've got the cash, but if I look at the other opportunities with that cash right now that I could safely do something with, I feel like my cash value is outperforming 3% without any risk, number one. Number two, I get access to that cash if it's in my cash value. I could always pay this off a year, 2, 3 years down the road if I really choose to.
Yeah.
But it is kind of nice not to have the hassle.
Yeah. Left hemisphere, right hemisphere. Logic. You're going through lots of logic with me. For an entrepreneur, for me personally, I couldn't have been a real successful parallel entrepreneur until I had that security and stability. Mm-hmm. So a lot of that is the right hemisphere. It's actually the more lucid, the more thoughtful, the more creative part of our brains. And so you're right. There's no logic to doing it. And ask me how happy I am I've done it.
How happy that you did it.
That's pretty happy.
It even went beyond that because we paid off all our real estate. So as that rolls in,
logically, real estate.
It makes no sense. As a matter of fact, all my friends in the early stage, I won't swear, but they said you're pretty ape crazy here.
Yeah, ape crazy.
Very much so. Thank you for putting words in my mouth.
There you go, man.
Exactly
I have less of it.
Well,
and the place we're sitting now, I don't have a mortgage on. I paid cash for this.
Yeah.
It's a legacy play. I don't really ever see selling this. And so it was just But the house, because I am looking at selling it now, here's my concern too, is I just think there's going to be huge opportunities.
Yeah, I agree.
And if I tie up that capital, I might miss out on those opportunities.
See, the predecessor to my counsel, Garrett, though, because we've talked a lot about this in the past, is also always make sure that you have your cash flow ready. I mean, always maintain at least 6-9 months a year of cash flow, and I have plenty of cash on the sidelines so that when the opportunity comes, you can strike. But just to have it there, just to be ready to pounce. I mean, I thought this thing already would have tanked. I'm just totally shocked already that. I mean, how you can take a car, a beautiful Ferrari, disassemble it, throw it out on the front lawn, and say it's worth more than now than it was before it was a vehicle. It escapes me. But at some point, the market will have to correct, and there will be buying opportunities. But I would still contend that at least we did this thing called a NEAT test, entrepreneurial appetite test. I turned out to be the least risk tolerant of anyone that I know. And so it actually enabled to me to be very, very effective by removing and mitigating that risk and that concern. And just, hey, my kids aren't going to starve. My wife is not going to be left destitute. It's covered. It's locked. Okay, now let's go play big. So for me, it's a like freedom enabling thing as much of a logic thing. And I think you can actually play both. I think you can do both.
One of the things people will say on the comments of some of our other videos is, once I paid off my mortgage, my finances exploded, my investments are doing great. And I'm like, whoa, whoa, whoa. Let's just think and break that down logically. If your investments were that good, paying off your mortgage actually slowed those investments down.
True.
And you would have paid your home off faster if those legitimately were getting the returns that they said.
Yeah.
Because sometimes people go, they have an up year and they get remembering the up year. They forget about the down year 3 years ago, and that wiped out some of that return. And so what they're quoting isn't reality. It's kind of like a business owner talking about revenue instead of profit. Sometimes people have a short memory on the losses and they have a long memory on the gains because it's a little bit more seductive when you're talking about it at a cocktail party or wherever it might be. So I'm legitimately in a place where I don't know that I want to pay it off, but I kind of want to have a goal to pay it off because look, my income was down last year, Rich, because I didn't speak on a single stage.
Yeah.
I mean, I did through Zoom and things like that, but I mean, usually I'm doing 24 to 30 gigs that way, and that generates a lot of interest in our services, and you know, that generates fees that way. So, but I still live the same lifestyle for the most part, from home more than on the road, you know, but fortunately I had the cabin here. But I watched a year where people struggled and I didn't have concern because I had the cash. Now, if I would have been putting extra money into that mortgage and then all of a sudden this hits and I'm only a year and a half away from paying that off, I'm in a risky place because now I've got all my capital tied up in a mortgage, right? That didn't lower the payment if I'm on an amortized loan. And yet I'm close to paying it off. So I like keeping control of my cash over time and then choosing to pay it off, which is the situation I'm in right now, is should I pay it off?
Yeah, well, I think that it really is a risk threshold tolerance. And I would agree totally with you. You've got to maintain a buffer. It's like when I was driving up here to your cabin. It was a little icy. It was a little slippery. I gave a little extra buffer. Maybe that's where we're at with the economy.
It's good because my wife drove off the road just 2 weeks ago.
Not good.
During the snowstorm.
Someone braked. A little extra buffer.
Yeah.
We got to keep a little extra buffer, right? But I will also say when you're getting ready to attack, I think your whole mindset, you play more in flow. At least I do. And I think it is an individual personal decision. I think it's really dangerous. And that's the thing I love about your killing sacred cows concept is you can't tell someone how to invest. It's what's your investor DNA. And I think that it's similar with risk threshold. For me, I couldn't have been successful to the level that I was if I hadn't have had that stability. And then I could play big. I could play fluid and lucid and play in flow. And so I think it really isn't just a matter of the logic and the numbers all tell me. Geez, when I was in college, I did compounding interest. And I guarantee you, I was a multimillionaire by the age of 32, according to those.
But it didn't quite turn out that way.
It didn't quite turn out that way, did it?
Right. No, it never does. And so as I look at this choice and I look at this decision, I know that I'm always paying interest, whether I borrow, and I know precisely what I pay because it's on the amortization schedule. It's the interest that they tell me is fixed. Or the harder one to see is the interest I give up by paying cash because I don't get to earn interest on the money.
Yeah, that one's not as obvious, I don't think.
Right.
But, I mean, as I've discovered, I put a good amount of chunk from one of my last sales of my companies into bonds. how did that turn out? Not so well.
Yeah, interest rates just kept going down. Right?
And so there's actually an argument that actually your mortgage, depending on your investment profile, maybe the best thing to do is to pay off your home.
For a lot of people.
It tied it up, but I don't know. What is your interest rate? What do you learn?
Right, if you don't know how to invest, don't know where to invest, don't know how to mitigate or manage risk, don't know your investor DNA, the best thing you could probably do is pay this off. But one thing I would warn people of, there's a level of arrogance that comes with a lot of people that pay off their mortgage. There's people that like absolutely judge those that haven't paid off their mortgage, like somehow they're superior to them. That's not you at all, but I'm talking about some of the comments we get, and I feel like Dave Ramsey's a culprit of that.
Yeah.
You know, like that pushes it, like people, if they don't agree with me that you pay off your mortgage, they're an idiot. Well, we got to consider peace of mind. We got to consider economics. We got to consider cost of money that we just talked about. We got to consider the impact of inflation. We got to talk about access and liquidity. And we also, if you're married, how does it impact your partner? Your wife really felt comfortable with you paying that off.
Well, I felt more comfortable than she did.
Right. Well, and if my wife was saying, hey, this would be a really big deal, then I would just do it.
Yeah.
But
well, and I think
I don't know, I'm ready to do it.
You hit the precipice. And so your profile's a little different. Maybe you're a little farther along, and maybe, you know, you have a little stability elsewhere. But when I left into the wild, wild west of entrepreneurship, it was cowboys and Indians. It was cold snow outside. So I really do think it's an individual choice, but I think it's not fair also to just crunch the numbers. I think you've got to look at this, what gets me in flow and lucid. And I see a lot of people right now that aren't having return on investment greater than
a lot of people, because if you go into a bank right now, you're getting like 0.25%, and they're charging 3%. Well, think about that. If you could buy a piece of real estate right now for $250 a month and charge rent of $3,000, that's what the bank's renting your money for right now. Isn't that insane? It's such a massive spread. And you know, my son asked me the other day, how do banks make money? And I'm telling him, and I can just see he's just thinking, what in the hell, Dad, that you know, this is the system we're relying upon. And I was telling him, this is why we're building a family bank. We don't want to rely on the banks. We want to start financing things ourselves at preferred interest rates for our family members and have underwriting, so there's still lessons and not just anybody gets money for any reason and can default. So, but it's amazing how we have these intermediaries in our life that, you know, they talk about, oh, you know, you could get 1% or 2%. Well, they're going for 100% or more, or even way more than that. Because even if they just give you 1% on your money and they charge 3%, it's a 300% markup. That's substantial markup. And that's why they give you a lollipop when you go there, so that you know you're a sucker, dum-dum. Like I literally went to the bank this week. I took a picture of the dum-dums that were there, and I'm like, oh, they don't have a product, but I do get to have a dum-dum sucker when I leave, you know, to remind me that why do they have rooms for their money? Why is every building they have bigger than any house that I see that anyone has? And it's like, you know, like we can really start cutting out the middleman, but at the same time, responsibility is an important piece, and we have to let go of antiquated rules. There's people that are being handed down from generations this old mythology that if you have your bank or the house paid off, you could never lose it. Now, here's the thing. In the Great Depression, there were callable notes. So you might have a $5,000 mortgage back in the 20s, and then all of a sudden the Great Depression hits and the bank says, we need our money right now because there's a run on the bank. And you go, I don't have enough. So they just take the home. And that happened to a lot of people. And think about the pressure and the stress and the pain that caused, that's handed down to generations right now, that they're actually erroneously believing that the bank can come and take that house from them. Not unless you have some balloon payment due at a certain point. But most of them, if you're a 10-year, 15-year, 30-year, or any of that, you are locked in as long as you make that payment. They cannot take that home from you and ask for that money up front like they used to. But that's where we have a lot of the scars and the wounds and a lot of the misinformation. So I want to be crystal clear. If someone wants to pay off their mortgage, I would not want to talk them out of that. But I would definitely talk to them about the methodology to get there. The objective is a noble objective because it's their personal preference, and personal finance should be personal. But the methodology to get there, just giving the bank extra money, doesn't make sense. Shortening your term on your loan doesn't make sense because now you have a forced higher payment and you have more risk of what I would call equity jail. You have money tied up in the equity of your home, and if you have a financial turmoil or situation or a credit crisis that the banks face, you might not be able to get access to that money when you really need it, because banks love to lend money to people who don't need it. You don't need it. Right now, a bank would lend you money in a heartbeat, Rich, because you have paid off real estate, which is a ton of collateral. You've got businesses that have been sold. You've got a good net worth. Sure, they'll lend to you all day long. But if you were in financial catastrophe or you lost your job, I don't care how good of assets you have. They're not going to lend you the money. And this is the notion people have to understand. The banks are making the rules and they're mitigating their risk. And people just play into that by going to biweekly payments. Well, that means you just make one full extra payment per year. So sure, over 30 years, you might shave 5 years off your mortgage. But if you just put that money in cash value, you might shave off 7 years on your mortgage and have access to capital along the way. We have to be more critical with the thinking and stop listening to the institution that's telling us what to do. And sometimes when I talk about this, people go, oh, does Garrett work for the banks? No, I'm saying if we didn't have to use banks at all the better. But let's utilize them, not be used by them, is what I am saying if you are using them.
I totally agree. I totally agree with that. I think both of us stand on the same side that you got to make sure you maintain your cash flow. I think there's another part of the equation in this. I had a number of close friends that had been in retirement and had put all their money in mutual funds and such. And when the market crashed the first time with this, it's like, oh man, there goes like 10 years. I'm out 10 years.
Oh my.
They're losing sleep. They're frustrated.
That's stressful.
Okay, so in that situation, are you better off to actually, not? I mean, it does. It honestly terrifies me.
If I had a choice, stock market or pay off my mortgage, I'm 100% pay off the mortgage. You got 100% of the time.
And I think that's the key point I was going to make is you better have another financial interest investment that's actually doing better than paying off your home. And right now, honestly, I've been on the sideline and I'm very comfortable with it. I'm not having to get all panicky, and it's like I watch the market go up, and I'm not having a lot of angst about it.
I don't ever watch the market. I get angst on crypto. I'm not going to lie, but I don't get angst on the stock market.
Well, maybe even more volatile.
But much more volatile.
But I do think that we've just got to invest our investor DNA. And so home can be a great investment, but the one thing I'd never argue with is always maintain that buffer. Always make sure that you put a good buffer. And right now, I don't think it's 3 months. I don't think it's 6 months. I don't think it's 9 months. I think you got to have at least, I agree.
2 years.
Agree. At least,
but that could be in cash value of life insurance. That could be in cash inside of a bank. That could be in some coins in a safe. And that could even be 1 month of crypto. And especially like I'm moving more towards USDC, which is a coin-based crypto that's backed by the US dollar. So for every dollar you have in there, you have $1 of US dollar backing it. So I kind of like that because there's a chance that if the US government does business with that USDC, you actually make a spread because of limited supply and demand, or simply you can get some interest on Coinbase by being in there, which the banks aren't really paying much on that. So something to consider.
Rich, one thing I'm interested in is like how you had the conversation with your wife about whether to pay off the house or not. Was she in a similar lane as you, or was she, did she feel more angst and anxiety around having a mortgage? Did she want to pay it off? Like, how similar were you in your viewpoint?
Very similar.
Okay.
Yeah, very similar. My wife and I have this beautiful relationship of my best investments just go create a company, make lots of money, and then I hand it to her and she goes and buys real estate.
That's a great partnership, man.
No, it really is. And she loves to pay them off, and I'm very comfortable. And I recognize it isn't always, and it's not the logical.
But you're where you want to be.
Well, not only where we want to be is we've eliminated all stress and anxiety. How much is there when everything's paid off? None. Is it smart? No. Is it delightful? I can't even tell you how delightful. And that was the point, is we found a model that worked for us. Everybody has their own threshold for risk. Everybody has their own investment model. For us, it was brain dead stupid from a logic standpoint. But there's not a lot of people arguing with me now how it works. There's not a lot of people arguing because all that property is appreciating. There's no debt on it. There's a cash flow monthly that's very, very nice. I don't need to be having a lot of stress. And I can go sit in the beaches of Los Cabos and not have any stress about much of anything. And so it took a long time to get there, but you know what? I actually think everyone has got to look at their own level of stress. But the one thing everyone must do is maintain that buffer. And if you don't have 2 years, I would say don't freak out. Get 3 months and then bolt on to it. And I see so many times people trying to accelerate it and quickly, and that's when you get in trouble because they start making really stupid investments. And I've had a number of friends. When I wrote Zigzag Principle, what prompted that whole thing was the big meltdown of 2008, 2009. I had at least 5 or 6 friends that had been financially independent. Done.
Just like that.
Not done. Not done. Going back at the age of 45, 50, and for the first time in 10 years having to go punch a clock. That was a hard adjustment. So don't over-invest, I don't think.
All right.
Well, both of you have great marriages. You can have good conversations with your spouses. For someone who's in a situation where they're deciding whether to pay off their mortgage or to hold on to it, but maybe spouses are in different places on what to do. Do you guys have any advice on like how to navigate that conversation, hear the other spouse out?
I mean, like I said, if my wife was adamant about it, we just pay it off. That's the thing, because it's not worth the stress, because we're creating stability, because it's a partnership. And we don't have to make every decision based upon economics. We can make decisions based upon peace of mind. And I believe that the greatest return is the investment in ourselves and our ability to create value. And if something derails or distracts us from that, well, if I would have made 2% more by not paying it off and end up with $100,000, 10 years from now, versus what if I could have made $500,000 by not fighting with my wife and not feeling stress and feeling free to create and not being stifled by that kind of, that argument that's regularly going to happen, because people have different money personalities. That's the bottom line. And we usually marry someone with a different money personality than we have.
Yeah. So it seems like even paying off the mortgage, if one spouse is in that position, and doing that in a way that fosters more harmony and peace and less stress in the home, it sounds like a major win to me.
I've got two comments here.
Okay.
First of all, there's this guy that I know, and I quite like him most of the time. And he talks about this thing called soul purpose. And
does he have long hair?
Yeah, something about that. And at the end of the day, money is nothing more than a vehicle that allows us to express our soul purpose. And so I actually think we can't lose sight of that. And then second of all, a happy wife is a happy life. And so I think we've got to seek to understand. Most of the time when there's a disagreement, it has nothing to do with even the mechanics of how it's going down. It has to do with some internal insecurity or something going on. And so seeking first to understand before being understood. So I think that actually is, I've got a little older and luckily a little bit more mature. I've learned that when there is a contention like that, the importance of seeking first to understand what the root of that insecurity is coming from. And then once you understand that, there's tenderness and you can always come to a conclusion.
Yeah, it's the art of perspective taking the perspective of another person to then have empathy or understanding towards them. I have one other question. You were mentioning like having a line of credit against your home, the HELOC, the home equity line of credit. When is it a good idea to get that?
I think it's good, especially if it's not being charged if you don't use it. Sometimes there's an annual fee on that. So you got to look at it like, is that worth the insurance policy of having access to cash? I've thought multiple times about getting a line of credit on this property. I just haven't done it because I have a liquidity, and it would be the last place I would want to go. And right now, I don't really enjoy the process of getting a loan from a bank. It's just,
kind of
it's
cumbersome.
Always another thing. We need a letter here. And, I'm like, okay, like I make more than what I owe on my house in a year, and you're going to make me jump through 1,000 hoops like anyone else. So, I mean, if it's easy to do, which sometimes we have banking relationships with portfolio banks that make that much easier. But I think if there's no fee to it, might as well get it, unless you're reckless. And you're going to spend it on
that's right.
consumption.
But we've used HELOCs all the way through. We have one on our home. We have one on our cabin. And, I think there are some really toxic, caustic bank relationships. I'm very fortunate that my little brother married into a family that owns a bank. And so a beautiful, wonderful, flowing, working relationship with our bank. And we've used the HELOC time and time again. I mean, we found the home that we're living in now. My wife had always fell in love. They were starting to lose it. Bam, we came in and within a week purchased it. And the way we were able to do that is just draw on HELOC. And we use it, though, as a quick-to-cash investment vehicle, not as a long-term financial instrument. Cool. So I think having a HELOC is a great idea. A great idea.
Right. Well, thanks. Now you get to make your own decision here for yourself. You have the cash, what your process is to get there, whether it makes sense or not from a peace of mind or economic standpoint. Turn your thoughts into profits and build the life you love. Want to master your money? Want to figure out the things that you could do to improve your finances? Click here and check out more videos like this on Money Matters.